Welcome to lecture 5 of module 7. In this lecture, we are going to deal with the practical problems related with the two topics that were the step number 2 to calculate the cash flow from the financing activities and the step 3 for calculating the same from the investing activities. So these two steps are the most important steps for finalizing the cash flow analysis. So starting with the step number 2, to compute the cash flow from the various investing activities, we are taking up the practical problem number 1. As you can see on the slide that you are supposed to calculate cash flow from investing activities from the following information. Moving with the different information provided, we will first start with the working notes as per the additional information provided in the question. So first working note will be on the asset which is given that we have sold a plant for rupees 35,000 and we are dealing with the plant and machinery which is given as an information 5 lakh in the opening and 7 lakh in the closing. So first working note is plant and machinery account. As given in the balances, we can see that the opening balance is given 5 lakh rupees. So we put it on the debit side to balance brought down 5 lakhs. We are also provided with the closing balance which we will write on the credit side by balance carry down, that is given in the question 7 lakh rupees, and as an additional information we provided with the depreciation. So we write it on the credit side of the account under the heading by depreciation 35,000, and in the second adjustment we are given the information that plant costing rupees 80,000 on which 15,000 had accumulated as depreciation was sold for rupees 15,000. So going with this, we know we have received a cash of 50,000. So we will put on the credit side by cash that we have received on as a sale proceeds 50,000, and on the same asset we can see the depreciation is already we have calculated 35,000. So going with this question, out of this 80,000, if we deduct 15,000 for the depreciation, we left with the balance of 65,000. So the written down value should be 65,000 for this asset in this particular situation, but we sold the same for 50,000. That means there is a gap of 15,000 rupees which will be the loss. So we will put that loss on the credit side by loss on sale of plant, that is 15,000. So we make the total of the credit side which comes to rupees 8 lakhs, and out of this 8 lakh if we deduct the debit side we reach the balancing figure of rupees 3 lakh, which shows it is purchase of plant as a balancing figure. So the total of the two sides debit and credit will be equal to 8 lakhs. Moving ahead with the working note number 2 that we will prepare on the building and accumulated depreciation on building. So first we prepare the working note number 2 on the accumulated depreciation on machinery account. As given by balance brought down 50,000 to build, and then we have also given this amount an old building of rupees 1 lakh on which accumulated depreciation was rupees 30,000. So we will show this depreciation on the debit side of the accumulated depreciation account. To building 30,000, and then we are also given the closing balance, to balance carry down, which is given 65,000. So, making a total of 85,000 on the debit side, we are left with a balance of 35,000 on the credit side, which we will transfer to profit and loss account. So, I put by profit and loss account. This is our balancing figure. So, the total of the two sides is made equal. Now, the third account we will prepare as a working note is the building account. In building account, we again have an opening balance of the building, which is given in the question 6 lakh. So, I will write on the debit side, to balance brought down 6 lakh rupees, and we have sold the building for rupees 70,000. So, I will write it on the credit side by cash, that is for sale proceeds. We have received 70,000, and as in the last account of accumulated depreciation, we have shown on the debit side depreciation of 30,000, which we will write here by depreciation 30,000. And then we can see that the cost of the building was 1 lakh. Out of that, if we deduct 30,000 as a depreciation, we left with the balance of 70,000, and we sold the building for 70,000. So, there is no case of profit or loss arising from the sale of building in this question. By depreciation, we have 30,000, and the closing figure is given in the question is of 8 lakhs. So, totaling the two sides, we have another figure of cash which shows the purchase of the building as a balancing figure amounting to rupees 3 lakhs. So, the total is 9 lakh. Now, finally, we will prepare statement for cash flows from investing activities, as it is a statement. So, we will just take the two columns, one is for particulars and another is for amount. So, as per the question, we have seen that we have sold a plant also for a value of 50,000 along with the machine for 70,000. So, we write down the proceeds first. Sale proceeds of plant, which is 50,000, and the sale proceeds of building, which is given in the question, as we have already mentioned in the account also, it is 70,000. Then we have the two balancing figures, one in the plant account that we have purchased a plant for 3 lakh rupees, again another balancing figure in the building account that also have a same figure of 3 lakhs shown as to be the purchase of the building. So, now we will dealt with that, purchase of plant, as it is to be deducted. So, I am putting it in a bracket 3 lakh. Then another we have purchase of building. Purchase of building is also of 3 lakh rupees. So, when we make a balance of the 4 items given in the question, we found the balancing figure of 4,80,000, that is a negative figure. Mean this is actually showing the net cash used in investing activities. This is the numerical number 1. Moving further to numerical number 2, in that question, this question also, we are going to calculate the cash from investing activities, as again we are also given additional information. So, we will prepare the working note accordingly, starting with the working note number 1. working notes. First we will prepare accumulated depreciation. This accumulated depreciation is provided on plant and machinery. So we will prepare accumulated depreciation on plant and machinery account. We have an opening figure of 55,000. So we will make buy balance brought down 55,000, and we have the closing balance of 70,000. So as per the question also, we have another balance of accumulated depreciation on 10,000 rupees on the plant. So we will treat it on the debit side to plant account. This is given in the adjustment 10,000. So we are left with a balancing figure on the credit side which comes to 35,000. This for 35,000 will be transferred to profit and loss account. Now we will prepare plant and machinery account as a working note number 2. In this account we are given the opening balance of the plant is 4 lakh and closing is 6 lakh. To balance brought down 4 lakh rupees, and then we have buy balance carried down 6 lakh rupees. And during the year we sold a plant for rupees 55,000. So by cash the plant is sold for 55,000, and the depreciation we have already seen in the above, that is 10,000. So we mark it here by accumulated depreciation account, that is 10,000 rupees. So we know that the plant's actually cost was 50,000, on which if we charge a depreciation of 10,000 we will be left with a figure of 40,000. But the same plant has been sold in the market for 55,000, means it has generated profit on sale, that is 15,000. So I will write it on the debit side to profit on sale of plant, which is 15,000 rupees. So nothing more is left. So we will make a total that comes to 6,65,000. If we compare it with the debit side, we reach the figure of 2,50,000, which shows the purchases. So we will put to cash purchase of plant. It's our balancing figure. Now moving to the final step of statement for cash flows from investing activities. Particulars and amount. So as per the question, we first take up the sale proceeds of the different things that we have sold in the market. The first is the sale proceeds of the plant. We sold the plant for a value of rupees 55,000. And then in the question, interest received on investment is also given. It's also our inflow. So we will add it here, interest received on investments, that is 25,000. We also have received dividend from investments in shares of the other companies, 30,000. So I have received dividend received, that is 30,000. You can see from the question that the non-current investments in the beginning was 6 lakh and in the current year it is 5 lakhs. So mean there is a sale of 1 lakh rupees as a investment, but it is written in the fourth point that investment worth rupees 1 lakh sold at a profit of 25%, means the sale proceeds of investment would be 1 lakh plus 25% of 1 lakh, which comes to rupees 1,25,000. Now moving ahead, we have a balancing figure in the plant account, that is showing the purchase of plant 2,50,000. If we make a total, so the total of the positive items, that is the cash inflow, comes to rupees 2,35,000 and we are having outflow of 2,50,000, means we have a balancing figure in negative, which denotes that net cash used in investing activities. I hope you understood the step of the calculation of cash flow from the investing activities. Moving to the last step of the cash flow statements is the computation of cash flow from various financing activities. To start with that, we have a practical problem number 3, in which we are given equity, preference, security premiums, debentures as well as the long-term loans. Additional information is interest paid on debentures amounting to rupees 12,000. So there is no more additional information provided, so we can directly move to the preparation of the statement. That is a statement of cash flows from financing activities. With the same two columns, one is of particulars, another is of amount. To start with, we can see the equity capital in the year 2021 was 5 lakh, but in the year 2022 it is 7 lakh. There is an increase of 2 lakh rupees, mean the company must have issued a share capital of 2 lakh. So we put it at the first step, issue of share capital, that is amounting to rupees 2 lakhs. So the next item is preference share capital, again showing an increase of 50,000, mean preference shares has also been issued in the market. Issue of preference share capital, that is of 50,000 rupees. And then the third point, it's given the securities premium, which has also shown an increase of rupees 20,000, mean we have received the same on the issue of the shares in the market. So we will put here securities premium also as a receipt of 20,000. Then next is given long-term loan. You can see in the question, nothing is given in the year 2021, but in the 22 we have a long-term loan of 3 lakh, means we raised this loan only in the year 2022. So it will also our inflow. So we put it on this point, that raising of long-term loans, that is amounting to rupees 3 lakhs. Moving further, we have a debentures of 6%, 2 lakh in the 21 and 1 lakh in the 22, means there is a redemption of debentures. So we will put the next point, redemption of debentures, that is 1 lakh rupee and as an additional information we have given interest paid on debentures 12,000, interest on debentures, that is 12,000. So after making the total of the positive items, that comes to rupees 5,70,000 and the negative items is 1,12,000. If we find the difference of the two, we reach the figure of 4,58,000, which means net cash flow from the various financing activities. Quite easy to compute. Moving to practical problem number 4, again we have to calculate the cash flows from the financing activities of a company from the given information, right? We are also having additional information to treat in the statement. So, we prepare cash flows from financing activities starting with the first. Equity share capital in 21 is 2 lakh and now it is showing 4 lakh rupees. You can see in the information, additional information, that the equity shares were issued at a premium of 5%. So, first we treat this issue of equity shares. The face value is 2 lakh, but they are issued at a premium of 5%. So, we add that premium into 2 lakh rupees. So, the total amount received will become 2,10,000. Then 8% preference share capital is also showing an increase from 1 lakh to 1,50,000, a total increase of 50,000 in the issue of preference shares. Then the third item is 10% debentures, 2 lakh, it is reduced to 1 lakh. So, this is going to be reduced from the same. So, we are moving to another point which can be added is the long term loans from 2 lakh to 3,50,000, showing an increase of 1,50,000. So, we have raised it in the market. So, we will put raising of long term loans. So, this is all the items we have to add up. Now, we have seen the debentures has decreased from 2 lakh rupees to 1 lakh rupees, means showing the redemption of debentures. Redemption of debentures, showing the outflow of the cash. So, we will deduct it. Then, additional information, dividend paid on preference share capital, dividend on preference shares amounting to rupees 12,000. Then the next adjustment is interest paid on debentures for rupees 20,000. Interest on debentures, that is 20,000 rupees. And the last is interim dividend paid rupees 7,000. So, we have to deduct all these items out of the positive items given above. We got the figure of 2,71,000. This 2,71,000 is net cash flow from financing activities. Next, we have another practical problem on the same for the computation of cash flow from the financing activities. We prepare the same statement for computation of cash flows from financing activities of a business, starting again with the equity share capital. You can see there is a change of 3,50,000 and there is a premium of 10%. So, we treat it together. We put issue of equity 3,50,000 plus 10% premium. So, it comes to the figure of 3,85,000. Next is debentures is also showing an increase of rupees 2 lakh, but debentures were issued at a discount of 5%. So, when we show here the issue of debentures of 2 lakh, out of this 2 lakh we will deduct a discount of 5%, which comes to 10,000 rupees. So, the proceeds will be 1,90,000. Next is long term loan has been raised. So, the raising of loan is there amounting to rupees 1,50,000. Then we have 10% preference shares in the last year 3 lakh and in the current year it is 2,50,000, showing a redemption of preference share capital. So, redemption of preference shares 50,000. Then we also given the dividend paid on preference share capital 30,000. Preference dividend 30,000 rupees. Then we have interest paid on debentures as well as interim dividend given in the additional information. So, interest on debentures as given in the question is 24,000. Interim dividend is 10,000 rupees. And dividend on equity is paid 9%, which comes to rupees 72,000, 9% of 8 lakh rupees. Dividend on equity 9% of 8 lakhs 72,000. So, after calculating the difference between the positive and negative items, we reached a figure of 5,39,000 positive, means net cash flows generated by the company from financing activities. That's all from my side, and I hope after solving all the practical problems relating to the operating activities, investing activities and the financing activities, you will be able to compute the cash flow statement and prepare its analysis in a positive way. Thank you so much for your attention.